Good morning, student. Today is 3rd June 2020, and this is my lecture number 10A. Topic is process and basis of accounting for class 11th. Student, accounting process begins with the origin and identification of business transaction, and it is followed by recording, classifying, summarizing of business transaction. Profit and loss account and balance sheet are prepared in this concern also. So, process of accounting is process of accounting. First step is identification. Of transactions. Second step is preparation of voucher. Preparation of vouchers. Third step is recording in the books of original entry. Next step is posting to ledger and in last preparation of trial balance and financial statement. So, student, this is the process of accounting. First, we have to identify the transaction, then preparation of voucher, recording in the books of original entry, then posting to ledger, and last preparation of trial balance and financial statement. Now, what do you mean by identification of transaction? Accounting deals with business transactions which are monetary in nature. In other words, the transactions which cannot be measured and expressed in terms of money cannot be recorded in accounting. For recording business transactions, it is necessary that these transactions are evidenced by an appropriate document such as cash memo, purchase invoice, sale invoice, pay-in slip, checkbook, passbook, etc. A document which provides evidence of transaction is called the source document. So, identification of transaction include these things. Now, second is preparation of voucher. On the basis of source document, entries are first of all recorded on vouchers, and then on the basis of vouchers, recording is made in the journal or books of original entry. Vouchers are printed separately by all the firm in their own names. A separate voucher is prepared for each transaction and it specifies the account to be debited and credited. Source document is generally attached to the voucher. Sometimes voucher also serves as source document, such as in the case of petty expenses. Vouchers, which are usually arranged in chronological order and serially numbered, are kept in a separate file. Now, third point is recording in the books of original entry. The books in which transactions are recorded for the first time from a voucher or a source document are called books of original entry. That is also called journal. It may be possible to record all transactions in the journal, but when the size of business grows and the number of transactions is very large, journal is subdivided into a number of books called subjournal or a special journal. For example, all transactions relating to receipt and payment of cash are recorded in the books, in the cash book. All transactions related to credit purchase in purchase book. All transactions relating to credit sale in sale book are recorded. Now, next point is posting to ledger means the process is to transfer all entry record in journal to respective account in ledger. A ledger is the principal book of account in which all the transactions ultimately find their place under their respective accounts in a duly classified form. For recording in ledger, all transactions are classified and transactions of similar nature are recorded at one place in an account open in their name, which will provide a complete picture of all the transactions relating to them at a glance. Thus, in a ledger, separate accounts are opened in the name of each person, whether customer or supplier. Likewise, separate accounts are opened for assets, liability, purchase, sale, etc. Now, last point is preparation of trial balance and financial statement. Last step in the accounting process is the balancing of ledger account and the preparation of trial balance. With the help of such balances, a trial balance is a statement. A trial balance is a statement which is prepared with debit balance and credit balance of ledger account to check the arithmetical accuracy of posting and balancing of ledger account. If a trial balance does not tally, it indicates that some error in posting or balancing of accounts have occurred, and steps are taken to locate and rectify such error. As the trial balance contains the balance of all ledger accounts, it provides a basis for preparation of financial statements, namely trading account, profit and loss account, and balance sheet. Financial statement include trading account, profit and loss account, and balance sheet. Now, basis of accounting. Basis of accounting. Basis of accounting. There are two bases of accounting. First is cash basis and second is accrual basis. I have also explained in my previous video about accrual concept. Same it will accrual basis and cash basis. There are two bases of accounting. Now I am going to explain about cash basis of accounting. Cash basis of accounting. Under this basis, income are not recorded unless they are received in cash. Similarly, expenses are recorded only when they are paid in cash. In other words, credit transactions are not recorded at all and are ignored till cash is actually received or paid from them. Thus, profit is merely the excess of actual cash received in respect of sale of goods and other income over actual payment in respect of purchase of goods, expenses on wages, salary, rent, etc. Income or profit is calculated with the help of a receipt and payment account. This basis is useful for professional people like lawyer, doctor, chartered accountant, etc. Now, advantage of cash basis. This basis is simple, realistic, and satisfies the conservatism instinct of many people. It does not require the use of estimate and personal judgment. It is suitable for those enterprises where most of the transactions are in cash basis. So these are the advantages. Disadvantage. It does not give true picture, not give true picture of profit and loss and financial position of enterprises because it ignores outstanding expenses, prepaid expenses, accrued income, and income received in advance. It does not allow matching principle of accounting. For example, acquisition of fixed assets will have to be treated as expenses of period in which payment is made instead of the period in which benefits are derived from them. Company Act 2013 does not recognize it. Cash basis of accounting is not recognized by Company Act 2013. Now, accrual basis. Accrual basis of accounting Accrual basis of accounting is such type of accounting in which incomes are recorded when they are earned or accrued irrespective of the fact whether cash is received or not. For example, sales made on credit will be included in the total sale of the period. Similarly, expenses are recorded when they are incurred or become due, and not when the cash is paid for them. For example, rent due to the landlord but not paid will be treated as expenses for the period when it is due and not in the period when it is paid. Hence, in accrual basis, profit or loss of a particular period is the result of matching of the revenue earned and expenses incurred during the period. This makes it necessary to consider outstanding expenses, prepaid expenses, accrued income, income received in advance, etc. Under the Company Act 2013, all companies are required to maintain their account according to accrual basis of accounting. Now some advantage. It discloses true profit, just it is opposite to cash basis of accounting. True picture of financial position of the business at the end of particular period, because it takes into account all transactions relating to a particular period and takes into account all adjustment like outstanding expenses, prepaid expenses, etc. Now, second advantage may be it follows the matching principle of accounting. Cash basis accounting does not follow the matching principle, but it follows the matching principle. Now, some disadvantage. It is not as simple as cash basis of accounting. Cash basis of accounting is very simple, but it is not simple. It requires the use of estimates and personal judgment also, but cash basis of accounting does not require personal judgment. So these are the disadvantages. Now I am going to distinct between cash basis and accrual basis of accounting. Accrual basis. This point is important for all the examination. Now, see what are the difference between cash basis of accounting. Cash basis record only cash transaction. Accrual basis record all the complete transaction, whether it is cash or credit. Second, as per this basis, cash basis, only those income are recorded which have been received in cash. But as per the accrual basis, all the incomes are recorded whether cash paid or not paid. Third point, maybe it does not follow the rule of Company Act 2013, not follow Company Act 2013, but it follow. It does not follow the matching concept, but it follow the matching so it does not follow. Now this basis of accounting is suitable for doctor, CA, lawyer, etc. But accrual basis of accounting is suitable for all the enterprises which motive is to earn profit. So these are the basic difference between cash basis and accrual basis of accounting. Now I will meet you in next video with some new topic. Thank you very much.